Hi, and welcome back to my channel. We've got a lot to talk about today. On the agenda, we've got historically low oil prices, Enphase Energy, which I've talked about purchasing. First, we're going to talk about what I did this past week. I put another $150 into my portfolio, so my total investment is now $4,300. What did I do with that money? I bought one share of VTI, or Vanguard Total Stock Market ETF. I purchased that at $141.61, meaning I'm now up to 3 shares. That's my second largest holding. And then I bought $15 worth of Bitcoin in 2 transactions, with my new Bitcoin total being 0.0972 Bitcoin. But now we'll take a look at what my portfolio has done over the past week. So on the day, we can see only up about $20. And in the past week, down 1%. In the past month, not very good. Up 15%, but the market's recovered more than that. Over the past 3 months, we start to see that things are not going well, so down 17%. Over the past year, down 12.7%, and all-time now down 12.72% as well. So I am down about $550 right now. The stock market struggled, and I think there's a lot of reasons to be positive about what's going on. Now we're going to talk about oil prices and why those are so important right now. But first, don't forget to like the video, subscribe to the channel, and let me know what you want to see next. The channel's growing slowly but surely, and I'm up to 84 subscribers as of editing this. Thank you. Here we have an article from Market Extra. They say, avoid oil stocks as historic divergence with oil prices suggests too much volatility to risk buying. As we know, oil prices have struggled immensely this week, and this is going to have a huge impact on the stock market one way or the other, so let's see what exactly they're talking about. They say the dislocation in the crude oil and oil-related stocks has reached unprecedented levels, which makes the energy sector a little too hot to handle for investors. That comes as the front month. May futures contract for West Texas Intermediate crude took a historic plunge on Monday into negative territory as the glut of oil and lack of storage space sent oil prices into negative territory, meaning sellers were willing to pay buyers to take physical delivery of the oil. So for those who weren't aware, oil futures did reach a negative price. I saw prices as low as negative $30 per barrel. And what this basically meant is that there was a supply of oil coming in and so little demand that people didn't have anywhere to put the oil. So these contracts ended up going into the negative. The problem is that as travel has stopped, there's no place for the oil to go, and there's literally zero demand for it. The basic economics here say that it doesn't matter how big the supply is or how small the supply is, if there's no demand, it's essentially worthless. So here they say a technical analyst at Janney Montgomery Scott said investors should watch out for explosive moves among energy stocks, but the charts don't yet give a clear enough picture of which direction the sector might move. So they're saying it could go up, could go down, we just don't know either way. As they say, although there's good value to be found in the sector, he indicated that the risk of a wipeout is still too high. For this reason, we want to continue to avoid the sector while the trading landscape remains so potentially volatile for the time being. There's likely good value at such oversold levels, but we have yet to see signs of real stabilization in energy prices, and this may have detrimental effects on energy stocks in the weeks ahead. When we look at this graph, we can see not only how oil prices have been over the past few weeks, but how these crude oil index trackers have struggled. So here we can see this drop is really where the problem is. So we can see that these funds have actually stabilized off and gone back positive, whereas these futures contracts have not. And that's really the ones that are the most volatile, unfortunately. So they can say on Tuesday, continuous crude oil futures, which track the most active futures contract, plummeted 43% to $13 a barrel, while the XLE fell just 1.8%. So that futures contract, like they said, fell a lot more, where these more market-driven index funds fell just 2%. So over the past month, the correlation coefficient between XLE and continuous crude oil futures has negative 0.09 based on MarketWatch analysis of FactSet data. That compares to correlation coefficients of 0.97 over the past year and 0.62 over the past 5 years. So for those who aren't aware, correlation coefficient runs from -1 to 1. The further away from 0 you get, the more correlation there is. So if it's a positive correlation of 1, that means that they are absolutely correlated positive, and -1 means they're absolutely correlated negative. So this negative 0.09 correlation means there's almost no correlation at all, which means things are not good. They said it's important to note that historically speaking, the XLE has shown a very high directional correlation to spot prices, and we believe that such a relationship can reemerge in the coming weeks, which implies that either crude prices have to stabilize, or the equities that have thus far been buoyed by liquidity measures will need to turn lower going forward. So we'll skip the rest of this article, but what they're saying is we don't know which way things are going to go. There's pretty much too much volatility going on to know exactly what's happening. Next up, we have a very interesting article about the worst ETF that you can buy on Robinhood right now. So, as they say, young investors have struggled with this one. So, traders on Robinhood and SoFi Invest rushed to buy the United States oil ETF, which crashed this week and has lost 80% of its value this year. Most bought stock on Robinhood and the most bought stock on SoFi. They say the ETF saw a 300% increase in ownership month over month. Even after a pop on Thursday, the fund was down 32% this week. So they basically said that people are rushing to this stock. Why? Price plummeted below $3, so that has people thinking, well, how much lower could it possibly get? But where it gets interesting is it says retail investors mistakenly thought this fund was a proxy for the spot or cash price of oil and bought in as its price plummeted. It's not. The point here is to track the front month oil futures contracts. And the problem is that this ETF has changed their structure, meaning that nobody knows what's actually going on. So they say USO was the most bought name on Robinhood, and they talk about the fact that there's 10 million users on Robinhood, and it's now in the top 30 owned. So here we can see the fund has struggled enormously, even with people buying it up. So they said that month over month ownership has increased 300%, but the price has plunged 45% alone this month. Basically, they're saying that people don't know what they're investing in, and this is why I think people have to be more cautious on Robinhood and really investing in general. So I said the fund began to run into trouble when the May contract for oil began diving last week. This week, the May contract fell to an actual negative price. The fund likely had already sold those contracts for the June oil futures, but the fall to negative prices sent a chill for the whole market. So this is where we're going to start to see issues, as that this is not going to affect one company or one fund, but rather the entire market. So here they say on Wednesday the fund dropped 11%, even as oil's June futures jumped 20%, and on Thursday when those futures jumped 30%, it only gained 12%. So now we'll take a look at the ETF itself. Here we can see trading at 265 is USO, or the United States Oil Fund. On the top right here we can see almost 187,000 people on Robinhood own this ETF, and we'll go ahead and take a look at what that article talked about. So down 36% over the past week, 45% on the month, 3 months down 77%, over the last year down 81%, over the past 5 years down 86%. Basically, avoid it like the plague. Do not buy it under any circumstances. There's just too many things going on here. So there's a lot of articles actually about what's going on, similar to that article that we just read. But the big thing I have to say here is avoid it. Next up, we have Enphase Energy, because of course I keep talking about buying it, and they've actually recovered quite well from this whole mess. So we'll take a look. So over the past month, up 25%. Over the past 3 months, still up 21%. Despite that large drop, they're starting to recover. And over the past year, up 300%. I know, I wish I would have purchased. Up 187% over the past 5 years. Very strong buy rating here on Robinhood. And when we start to look at the earnings, we can see why. Consistently growing earnings, they're paying off their debt. I think next week is going to be the week that I finally pull the trigger on Enphase. Let me know what you think I should do. And now we'll get into my stocks. We're only going to talk about a few this week because the oil took up so much of what I was talking about. But we'll talk about VTI, because of course that is the second largest holding in my portfolio now, and I increased that last week. So this is down $31 all time now, or about 7%, but my average cost is slowly decreasing to about $150. This will track the whole market, and it has done so pretty well. So up 17% on the month, just like the rest of the market, down 17 over the past 3 months, over the past year, down 7%. When we zoom out to 5 years, we can see very consistent growth. Lower dividend here, which means that the growth is going to be a little bit faster and that large drop off. But I think that right now is a very good time to buy. The price is down, and I think I'll continue to do so. Second up, we have AT&T trading for about $29.50 right now. Down $32 on this one all time again, but the dividend yield is now about 6%. Very strong hold rating here on Robinhood, but I think I'm going to continue to buy AT&T due to that high buy, or rather the high dividend and the low cost right now, as well as the fact that despite everything else being closed due to quarantine, cell phone companies, change very little. There's very little variability going on with them right now. So over the past month, we can see they're up 7%. Over the past 3 months, down 23%. I'm not sure exactly why that is. If you know, let me know. Over the past year, down 5%, and over the past 5 years, down 10%. So not a great trend right here, but we can see that they were trending upwards until this whole mess broke out. And the third and final stock that we're going to talk about today is KeyBank. I think this is an interesting one because clearly banks are struggling right now. People can't pay their mortgages. They're struggling to pay their rent, and these bank bailouts are slowly coming in, so we'll have to see what happens. Total return here is minus 33%, which is horrendous, but of course all banks are struggling, and I don't know that it has a whole lot to do with KeyBank. Very low price here, decent dividend, and a high buy rating. Up 4% on the day, on the month up about 12%, on the year down 37%, and over the past 5 years down 25%. So slow growth up until we hit this large roadblock, basically. So definitely one to watch, and something that I'm gonna figure out, do I want to buy more? Do I want to hold my position? Do I want to sell? And of course, last we have Bitcoin. I like to talk about this one every week, up to $7,500 on the price. As we can see, up about 5.5% today. Over the past week, up about 6.6%. Slowly zoom out, down over the past 3 months. A little bit of growth over the past year, 36%, and over the past 5 years, up almost 3,300%. I'm going to continue to buy. This week, I should actually pass 0.1 for my total quantity, or 1/10 of a Bitcoin. Now makes up almost 20% of my portfolio. Total return is down $140. But of course, I sound like a broken record. I say it every single week. I believe that December of 2021, Bitcoin will peak. And that peak could be anywhere from 100,000 to 300,000. We'll just have to see. All right, that's the end of everything today, folks. Thanks for watching this long. I'll be back with another video at the end of the next week, and I'll see you then. Thanks.